higher prices, and peak oil. They are here to stay. Saved by Senate Republicans, big oil companies dodged an attempt to slap them with windfall profits tax and take away billions of dollars in tax breaks in response to the record gasoline prices that had the nation in a recession. Republicans also blocked another energy measure that in part would extend a solar energy tax credit, considered key to the growing U.S. solar industry. The Democratic windfall proposal would have imposed a 25% tax on any unreasonable profits of the five largest U.S. oil companies, which together made $36 billion during the first 3 months of this year. It would also have given the government more power to address oil market speculation, opening the way for antitrust actions against countries belonging to the OPEC oil cartel, and made energy price gouging a federal crime. Crude oil hit a record of $135.09 a barrel on May 22nd. Then it dropped 9.4% over the next 9 trading days to close at $122.30 on June 4th. Then it soared past its previous record to $138.54 on June 6th on a plunge in the US dollar. And besides dealing an expensive lesson to all those speculators and traders who bet that oil would fall from $122 back down to $110 or lower, the temporary drop in oil prices carries a very frightening message to consumers. So don't expect to see any drop in the prices you're paying at the pump, or at the food store, grocery store, or anywhere else, from any decline in the price of commodities. The price of gas is at a new high, a new record. And now it's going past $4 a gallon and on upwards, still rising rapidly. And you can expect the same from other commodities that have tumbled in price. Consumer prices will stay high even as commodity costs come down somewhat, theoretically, if all goes well. That's not a guarantee. And as the price for corn, it will go up. And it has soared as heavy rains have held up planting and destroyed many acres of corn, of the corn crop, U.S. corn crop. There's no quick relief coming to consumers, even if commodities were to drop in price, which we're probably not going to. Well, so why aren't the prices you and I pay about to come down with declining costs of wheat, oil, and many other commodities? Part of that business, as usual. Consumers know prices go up much more readily when they come down. Sellers of goods and services try to retain as much of the price increase as they can. Call it greed. Yes, pure greed. Even when the reason for the price increase has vanished. Only gradually does falling demand or price cutting by competitors roll back higher prices in the so-called normal world. Anyway, these are not normal times. Just watch the weather. Watch the news. One reason high prices are going to be so sticky this year isn't so familiar. It's now the result of the way the global economy and the U.S. economy are very out of sync right now. The global economy is growing rapidly. China's economy is growing at better than 10% so far in 2008. India is growing at 8%, Russia at 7%. Even the Eurozone is moving along at almost 2% growth. That's faster than a speeding bullet for those economies. And all this growth has fueled extraordinary jumps in commodity prices. And that's not good. So there's rising demand and a lot of greed and speculation going on in the markets. And it's connected to something else. This is bigger. This is bigger than us. This is bigger than humankind. And at the same time as the scorching global economy keeps the price of commodities boiling, growth in the U.S. economy has gone tepid. In the first quarter of 2008, the U.S. economy grew just 0.9% at best. And it's going to be not much more than that for the rest of the year. If not, going less. Even getting less than that. No. These are more signs, end times, transition days. There's a new world coming. It's spoken of in the Holy Bible. All prophecy may be fulfilled. These be the days of vengeance. And yes, these are more signs. And there's more to come.